Question would be, what is the key to understand Japfa's business model given its diversified animal protein segments and market?
Okay, so I think you can basically say that we're an industrialized farmer. We're an agri-food company, and we're basically producing staple protein meats for emerging economies. So we do 5 proteins in 5 countries. So the 5 proteins are basically chicken, beef, aquaculture, swine, and dairy. And the 5 countries are China, Indonesia, India, Myanmar, and Vietnam. I think you can break our business down into three main areas. So in upstream, midstream, and downstream. So in upstream, we do 2 things. We do a breeding operation, which is making babies, and the second thing we do is manufacture animal feed. So in the midstream, we talk about fattening farms. So really it is talking about putting, for example, in chicken, a day-old chick together with feed, and you build a broiler chicken, which is what is sold into the market. So, and in downstream, we talk about value-added, protein-based, branded consumer food products.
Could you share with us the core competency of Japfa?
Okay, I think today we can define Japfa as an industrialized agri-food producer, and basically we're an industrialized farmer, and we define that in 4 ways. So the first thing is we tend to do things on scale. So we do things with a large scale, and we enjoy the benefits of having economies of scale in the businesses that we operate. Number 2, we actually look at technology and apply the best available technology in our business. So in terms of a livestock producer or industrialized farmer, I think we can say that's genetics, feed technology, and farm management. The third thing that probably defines us as an industrialized agri-food producer is that we take biosecurity very seriously. So when you go to our farms, I think you go through a very stringent biosecurity process, and I think we pride ourselves that we are one of the few poultry companies, or the only poultry company in Indonesia that has its own in-house vaccine research and production facility. And that allows us to be on top of disease issues in the countries that we operate. And I think the 4th definition of what an industrialized producer is we look at our business with respect to standardization and replication. So, for example, in China, we build 10,000 head dairy farms. And today we have 6 10,000 head dairy farms in China. So once we actually get a model that works well for us, both from the way the farm is actually built and set out, as well as the management structure that's required for each farm, we take that model, which is with the objective of actually building an operation that's most comfortable for the particular animal that we look at. Because obviously, when you keep an animal happy, you're either going to get the animal to put on weight, or in terms of a dairy farm, for them to have very good milk yields. So that's our focus in life, to maximize efficiency and yields from the farming operations that we do. So by having a standardized poultry farm as well, a breeding farm, it allows us to replicate it and actually grow the business quickly.
Okay. Knowing that since second half of 2014 to the first half of 2015, so that was kind of a down cycle for the poultry market, as well as there's a beaten up pricing for the raw milk. So can you shed some light on the cycle for poultry as well as the dairy cycle?
Okay, I think when we look at Japfa Limited's business today, we can basically say we've got three key pillars. And even though we do 5 proteins in 5 countries, I think the key pillars are chicken in Indonesia, dairy in China, and both swine and poultry in Vietnam, Myanmar, and India, right? So when you look at 2 of the pillars you mentioned, which is poultry in Indonesia has gone through a downturn in Indonesia in 2014 and late 2014 and 2015 for a variety of reasons. Primarily being an oversupply situation in the poultry industry, as well as flattening of demand for poultry products in Indonesia. And in China, we are actually facing headwinds as well in respect to our raw milk prices being what we believe on the lower side of milk prices. And those 2 have pulled the pillars down. But fortunately, we've seen the emergence of our 3rd pillar, which is animal protein others. So we've seen our businesses in Vietnam, where we introduced a new protein in 2012, which was pork. And that swine business has done really well for us in Vietnam and is growing quite robustly. And then our poultry business in Myanmar has also been very encouraging, given that we have early mover status in a new emerging economy in Asia. So that diversification strategy that Japfa Limited has is actually already yielding some benefits in that in the agribusiness sphere, even though we produce a staple protein, you do go through agri cycles. There's a cyclicality and partly also because if you look at Indonesia, poultry is consumed at about 9 kgs per person per year in Indonesia versus the same demographic Malaysia, which consumes something like 48 kgs per person per year. So really our business is directly correlated to the purchasing power of the low-income group in the various emerging economies we operate. So when you have macro impacts in that economy, it does affect actually the demand growth. But so these things do happen, but with the diversification strategy that we have in place, it allows the various cycles to kind of balance each other out, given that we do 5 proteins in 5 countries.
The next question I think that most investors would be interested in would be on the currency risk that Japfa is taking on.
Okay, so when you talk about currency risk, let's talk about Indonesia in particular, where we've seen the most volatility in the last year in the rupiah. I think suffice to say we need to break down the currency risk into 2 main areas. Number 1 is the operational currency risk versus the borrowing currency risk, right? So operationally, because we have the ability to actually pass on all raw material cost increases in our feed business through the feed selling price, that actually allows us to mitigate not only commodity risk fluctuations, but also rupiah risk. So the ability for us to pass on is very strong in our feed business, and the feed business actually in Indonesia represents about 50% of our consolidated sales in Indonesia. And in all the other animal protein operations like Myanmar and Vietnam and India, it represents more than 50% of our sales. So feed has this ability to actually provide a very stable profit margin, irrespective of whether commodity price changes are affecting the business or whether rupiah is actually affecting the business. So that ability is very strong, and I think it's demonstrated in our recent numbers and also in the recent financial numbers that we put out in our deck. So you can see when we do a 3-year comparison of the last 3 years of our poultry business in Indonesia, you can see the stability of the operating profit that's provided by the feed business versus the other businesses that tend to make the news more than just that basic, stable profitability that feed provides. And that's across the board for all our animal protein businesses. But having said that, in Indonesia, we've also got a US dollar bond, which we issued and is coming due in about May 2018. Now, that is definitely where we have a currency mismatch. And I think when we actually issued the bond, we looked at the essence of the company in that at any one point in time we have inventory of corn, soybean meal, which are both US dollar linked prices that represent, at least we've got in stock about $150 million at any one point in time. Number two, we don't have an operational risk, as I said, to currency. So by taking on a US dollar bond, it allowed us to have the Indonesian listed subsidiary tap another market for funding. So when we did the US dollar bond, it was a 144A issuance, and that actually lifted or widened the funding sources for TBK. We had gone to the Indonesian rupiah market and issued our second Indonesian rupiah bond of 1.5 trillion. So I think we had to do the USD bond at that time to basically follow the expansion of the poultry industry that was growing quite robustly at that time. So basically, our US dollar bond in Indonesia is due in May 2018. Up to the end of 2015, we actually bought back about $22 million of that bond with the spare cash that we have. That helps us actually hedge our US dollar exposure in 2018. In addition to that, we do operational hedges as well. So we try to cover about 70% of our future operational payments in US dollars. And while it's not a perfect hedge against the US dollar bond, by having operational hedges in place that we theoretically don't need, it allows us to actually keep up with the movements in the currency. As well, I think we want to point out in Japfa TBK for 2015, given the tough year that we've had in poultry, at least for the first half of the year, Japfa TBK still managed to generate about 180 million in EBITDA. So it still is a decent EBITDA generation. And prior to the movement in the rupiah, also when we look at our leverage ratio, we tended to stay in the range of net debt to equity of about 1 to 1.2 maximum. And it's only the rupiah movement that has shifted us out of that scale that we believe is the right and responsible way to actually leverage the business.
Can you share with us a long-term goal or a long-term plan for Japfa?
Okay, I think our long-term goal would really be to look at the structure of consumption of proteins in the emerging economies we operate. And today, if you take chicken in Indonesia as an example, 85% of the chicken is actually sold in our company through the wet market distribution. So actually at midstream level. And only a small portion finds its way to consumer value-added branded products. I think in the long term, you would see a shift in consumption towards that area and less in the wet market. And I think our long-term goals would be to establish a brand that reflects the ability to have food traceability and food safety all the way back to the farm. And I think today we have, for example, the Greenfields brand for our milk that already is reflecting that brand essence that we want to develop for all our